Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host Nina Mishra. In this episode, we discuss the fast-growing video gaming and eSports industry. Joining me today is JP Lee, Product Manager at VanEck, and he manages the VanEck Vectors Video Gaming and eSports ETF, ticker symbol ESPO, which is the largest ETF in this space, and it has done really well this year. It's up almost 70% year to date. JP, welcome back to the show.
Hey, thanks for having me, Nina. I really appreciate it.
So let's talk about the pandemic's impact on the industry first. We know that video gaming and esports has been one of the biggest beneficiaries of this health crisis because people who are stuck at home, they have been spending a lot of time and money on video games. So talk to us about how the coronavirus crisis impacted the industry.
Sure. Well, 2020, as you all know, has been the year of the pandemic, and video game companies as a group can be loosely described as part of the, quote, work from home pandemic trade. So these companies as a group have been very successful in this new kind of stay-at-home environment. And it's really because there's not much else to do. You know, you can't go out to the movies anymore. Your entertainment options are limited. And in a lot of ways, video games are serving as a new form of entertainment and a new way to socialize with other people. So video games in a lot of ways are filling this void of social interaction that the pandemic has kind of made very restrictive. So across the board, for video game companies in the industry, we've seen a massive spike in revenues. We've seen a massive spike in users, and then also engagement across some secondary metrics. And so it's not just video gaming, but also maybe sites like Twitch or Discord, which are very highly linked to the gaming ecosystem. All of these types of services, websites, and companies are seeing revenues, users, engagement spikes, and it's continuing to grow even as the pandemic stretches into what is it, the ninth month that we're in now. So the pandemic has been very hard on everyone, but for video game companies, they're making a lot of money because of the way consumers are behaving under this new environment.
So do you think these trends can continue even after this health crisis is over? Because hopefully we will have wide rollout of vaccines available for general population by May or June or definitely by July next year. So we will see that movie theaters, bars, sports complex, they will reopen, and there will be a lot of options for people to entertain themselves and also connect with friends. So these trends that we saw this year, do you think they will continue in 2021 and beyond too?
So that's a complicated question with a lot of different wrinkles in it. So let's start here. So when everything opens up, you know, these stocks and this kind of behavior that we're seeing from consumers is going to be affected. Okay, so these are growth stocks. Video game companies are growth stocks. So the valuations and stock price is being driven by expectations for future growth. So when those expectations fall, the stock price will fall too. And we wrote a really good white paper, and one of the risks outlining the industry, and one of the risks that we kind of highlighted was, we called it the return to normalcy risk. So just like you mentioned, vaccine comes out tomorrow, restaurants open, movie theaters open, et cetera, et cetera. The work from home stocks are definitely going to be affected. And we saw that a few weeks ago when the vaccine news came out on Sunday. A couple weeks ago, Zoom was down huge. I want to say it was like 20% in one day. And eSPO, the ETF, was down about 8% over 2 days. And, you know, that sort of thing happens to growth stocks when bad news comes out. And in this case, bad news would be for the companies that people are going to have more options to do things outside of the home, and they're not going to be playing video games as much and spending as much money. So that is definitely a risk, and that is definitely something that we highlight as something that's going to happen eventually once the vaccine comes out. However, the growth of the video gaming industry is not solely tied to COVID. So when you think about the spike in engagement and the spike in users and revenues that we've seen in the last 9 months or so, we see that, and a lot of other people see that, as an acceleration of trends that were already in place. So video gaming did not just like have a great year this year just because of COVID. Video game companies had a great year in 2019. And if you go back to 2019, the S&P was up over 30%. And this group of companies, as reflected in eSPO, was up over 40%. So we saw great performance in 2019 before COVID even started. And I think the reason for that is because there are these long-term persistent trends which have really helped to support and grow the industry. And we can categorize them. There's different ways to think about it, but we think about it in three main trends that we can talk about. So the first would be consumer demand for interactive digital entertainment. So consumer demand, consumer preferences and consumer behavior has shifted in the last 10 or 15 years, and more people want to be online, hanging out, interacting with friends. And anecdotally, and just kind of a great example of that is the social media. People want to be clicking pictures and taking pictures and talking to their friends and having back and forths online, whether it's on your mobile phone or your computer. So that's trend number one, and that was in place before COVID, right? So trend number two is we would call that cord cutting, the fragmentation of the digital media landscape. So consumers today have more choices and more options than they did 15 years ago. Okay, so instead of just saying I'm going to buy my cable subscription package for $100 a month, I'm going to watch whatever Disney, ABC, HBO tells me to watch on my TV at 8 p.m. or 10 p.m. or wherever it is. Now it's video on demand, it's streaming, and it's video games. Okay, so it's $10 on Hulu, it's $10 on Netflix. Maybe you'll get Disney Plus, and I'm also gonna lump in my video game spending into that category because I'm playing video games a lot. So in a lot of ways, the publishers and the video game companies involved are trying to kind of mimic a sort of subscription service revenue stream in their new business models. And that really syncs up nicely with the cord cutting trend. And then finally, demographics are so key to the video game story. And it's such a huge misconception from a lot of people that, video game players and people who are spending video game dollars on video games, they're 12 years old or they're 15 years old and they're spending their money on their parents' credit cards. And that's simply not true across the board. Your average video game consumer is 30-ish and has an above the median salary. So these are people who are adults who are not even in college. These are fully grown working adults playing video games and using them as a primary form of entertainment. So when you take all three of those kind of pieces of the pie, demographics play such a huge part of it because young people, and when I say young people, I mean people, let's say 40 and under, they're more prone to using interactive digital entertainment, and they're more prone to cord cutting. And so it's not 12-year-olds, it's the whole swath of the population that's under 40 that's really driving this bus. And then as you go forward, so think about this too, as you go forward, so 10 years from now, 20 years from now, the people who are 5 years old now or 10 years old now, they're growing up in this video game environment where they're playing games on their tablets and on their Nintendo Switches, and they're going to continue to play video games throughout their life. I mean, at least up until they're 40 years old or whatever. I'm 37 years old. I still play video games regularly. And I know a lot of people my age who are in the same boat as me. And so when you kind of think about it take a step back, you think about those big picture trends, which are not just specific to video game, but are affecting all sorts of entertainment and tech industries. Video games are kind of sitting in a sweet spot, and they have, the companies that are in that sweet spot are doing very well because of those reasons.
Very interesting. I agree that industry was growing very fast even before this crisis. COVID accelerated that growth, but some of those trends are going to continue even after we have these vaccines, and especially the new gamers who have started enjoying gaming, they are probably going to stay and continue playing moving forward too.
Exactly. It's not necessary. I mean, okay, the vaccine comes out today. It's not like everybody's going to say, okay, I'm not ever going to
Right.
play a video game anymore. The revenue, it might not be at this all-time high that we're seeing, but we've broken through to these new highs. There'll be a little pullback, and I would expect to see continued growth going forward. And we call the video game story, it's a long-term structural growth industry. And when I say structural, I mean, there are things that are different today than they were 15, 20 years ago, and that's related to technology, consumer preferences, demographics. That's what makes it a structural growth story. And that's why, in my opinion, COVID is not once COVID goes away, it's not like this industry is going anywhere.
So let's talk a little bit about this structural growth story. How big is the video gaming and esports industry currently, and what is its expected growth rate? So I understand it's a global industry, global market. US is a big market, but China and some other Asian country, Latin America, this industry is growing very fast in those countries too. So talk to us about the expected growth rate going forward, the current size, and also where that growth will come from.
Sure. So you're very correct to point out that this is a global industry. It's not just United States. It's not just Europe. It's everywhere. It's U.S., China, Southeast Asia, Brazil. It's domestic market consumers and it's emerging market consumers. So let's talk about the top line video game revenue numbers. So there's a company called Newzoo, and they create these great research reports, and they aggregate all this data, and they're doing a lot of great work. And they're saying, well, at the beginning of the year, they said in 2020, it's going to be a $168 billion a year industry. And they have since, in the last couple of weeks, revised that number up to $175 billion globally projected for 2020 in video
Wow.
gaming. Okay, so that number right off the bat, I mean, okay, that is not 15-year-olds using it. There's not enough parents in the world to create that kind of revenues being used in the credit card, right? This is supported by that global user base, and that's bigger. That 175 billion that's bigger than the cybersecurity industry, and that's bigger than even the robotics industry. So this is a huge industry that has been like kind of a sleeper for the last few years, and it's not a sleeper anymore, right? Everybody knows about this now. And when you talk about forward growth rates, Newzoo's projecting about 8% annualized growth rate over the next 3 years to get us to 2023. So solid growth rate. And that is for the video gaming industry as a whole. And now when you want to talk about esports, specific to esports, Newzoo has a projection of just under $1 billion for 2020. But the esports revenues are much smaller. So if you think about it, $1 billion in revenues for this year versus $175 billion in revenues for this year. Much, much smaller industry, but is growing much faster. So over the next 3 years, projected to grow at about 19 to 20% annualized revenues. And these figures kind of beg the question of, well, how do you define what an esports revenue is versus what a video game revenue is, right? So esports, the definition of esports is competitive video gaming between professional teams, right? It's like the NBA, but instead of playing basketball, you're playing a video game, whether it's Fortnite or Overwatch League or any of the other games that have these professional leagues around it. So you could make the case that for some of these very popular esports titles like League of Legends or Fortnite, do you count revenues there, right? So Fortnite right now has ongoing online esports competitions so people are playing Fortnite competitively for cash prizes as we're talking right now. Okay, so people are getting hyped, they're watching Fortnite matches, and they're spending money in Fortnite. So if if I'm not playing, me personally, I'm not an esports competitor, but if I'm watching Fortnite, I like Fortnite, and I'm watching the esports tournaments that are going right now, and look, I'm really hyped about it. I'm going to buy the new battle pass. Does that $15 I spend on my battle pass, does that count as an esports revenue? Some people might argue that it does, because League of Legends is a great example of it. Probably the biggest esports game in the world, but is every dollar spent in League of Legends considered an esports dollar, right? So you can kind of parse a universe out. And Newzoo is a little bit controversial, not that controversial. I mean, it's the industry standard in my opinion, but people like to take pot shots at Newzoo and say they're always revising stuff too much. And I think they're doing a great job, and I think they're parsing out the stuff in the right way, and they're keeping it. When they say 1 billion in esports revenues for the year, they mean specific to competitive tournaments and that whole ecosystem, versus saying, okay, well, this, League of Legends made $500 million this year. We're going to put $500 million into the esports bucket. So I do think Newzoo is doing a good job in their projections, and I've followed them for years now, and I trust their numbers, and I like their numbers. And it syncs up good with kind of like what our portfolio does, because you could take the portfolio of the ESPO portfolio and say, how much money are the companies in this portfolio making versus how much money is Newzoo saying? And they're kind of in the same ballpark, which is interesting. And that kind of, it's interesting too how it syncs up if you look at the portfolio. Again, global portfolio, global industry. So when Newzoo puts out the projections or their analysis of, X dollars are coming from China, X dollars are coming from Japan, they break it up like in a pie chart. That pie chart that Newzoo comes up with overlays very, very nicely with the pie chart of the country exposure of the ESPO portfolio. And so in this kind of situation where it's a new industry and there's different voices out there, I like to triangulate, right? So you say, okay, Newzoo says this, Goldman says this, Credit Suisse says this, our competitor says this, and you can kind of see, well, okay, this analysis or this projection is kind of way off in left field. So why is it off in left field? You kind of dig into the granular details, and that's, to me, what makes this exciting, is that it's cutting edge, it's new industry, and it's really getting built out right now. So it's a lot of fun to dig into that kind of stuff.
Sure, very impressive numbers. So I wanted to talk about new consoles now. And Microsoft and Sony, they released their new gaming consoles recently, and these are new generation consoles which are released once every 7 years. So there was a lot of excitement. In fact, I watched on TV that there were long lines for these on Black Friday, but few had success finding them at stores. They were already sold out at most retailers. So if you want them for Christmas, good luck finding them.
Yeah.
So tell us a little bit about the console landscape and why there is so much excitement around these new gaming consoles.
Okay, cool. So new consoles are always an exciting rollout release. So first of all, there's three major consoles. So there's the PlayStation, and the new one's the PS5. There's the Xbox, and the new one is the Xbox Series X. And then there's also the Nintendo Switch, which is kind of like off in its own corner doing its own thing. So when we talk about console wars and next-gen consoles, really we're talking about Microsoft Xbox versus Sony PlayStation. Okay, so before we dig in, let's distinguish between your casual gamer and your hardcore gamer, we'll call them. So hardcore gamers are the guys they're building their own PCs. They invest a lot of time and money into their machines. Typically, they play on PCs, right? It's the PC versus console debate. So either they're building it themselves, where they're going onto these websites and buying the individual parts and building the computer themselves, plugging it into the motherboard, or they're buying a custom-made computer for $1,500–$2,000. Those guys are hardcore. They live and breathe video games. Okay, casual gamers just want to plug and play, and I would consider myself a casual gamer. I just want to sit on the couch, play my Xbox, and have my controller. No big deal. So the next gen releases are a huge deal, because the new console releases are when all the casual players like me, they have this chance to upgrade their machines to a faster, better experience. So new console launches typically means there's going to be big, exciting new games coming down the road, which is really going to showcase the capabilities of the new console. So it's like, the new console's here, and we're going to make this awesome, great new game, and everybody's going to be really excited about it. And in a lot of ways, or first of all, for this console cycle, there aren't really a lot of amazing new games to be played that are really showcasing the new machine's ability. Okay, so if you have a game that was launched on the Xbox One, which is the current console, and it's going to be available on the new console, it's going to look better, it's going to be nicer, it's going to be cleaner, it's going to be faster, the graphics are going to be better. That's all going to be true. But there's no real game that's going to be available. It's like, okay, this game is going to be the most amazing game. We built it specifically for the next gen console. It's not even going to be on the older console anymore. It's just next gen. So that is not really happening right now. And I think there's this huge shift that the console wars, we'll call them, are shifting to platform wars. And so when I say platform, I'm referring to the subscription service models that are offered by Sony and Microsoft, where the consumer can pay a monthly fee. And so for Xbox, it's called the Game Pass. So you pay your Game Pass fee, and then you have access to hundreds of downloadable games. And it's also and they also have some limited cloud gaming capabilities on both of those Xbox and PlayStation subscription service platforms. So in my mind, the story right now is, okay, like you said, demand is crazy. Everybody wants a new console. It's exciting because it's going to be faster and better and bigger. But let's take a step back and think about, where is that going? Like, it's going towards platform. And it's also kind of very much tied into cloud gaming, which I know we're going to talk about in a little bit. But so the two consoles are very similar in terms of performance and capability. So if you have an Xbox and you have a PlayStation and you play the same game on them at the same time, there's not going to be like some massive difference where it's like the PlayStation the graphics are amazing and on Xbox they're just not as good, or vice versa. They're pretty similar in terms of performance. So then what is the input? What is your incentive to want to buy Xbox over PlayStation? And really it comes down to, well, what games are exclusive, right? Like, if I'm an Xbox person and I like to play a certain game, and all of a sudden that game is not available on Xbox anymore, that might make me want to buy the PlayStation instead, and vice versa. So we've seen in the last couple of months, Microsoft bought a development studio called ZeniMax Studios. So ZeniMax owns a bunch of IP, a bunch of these games that are some of the most popular games ever, right? So you're talking about the Fallout franchise, you're talking about the Elder Scrolls series, you're talking about games like Quake and Doom. So these games have very, very loyal followings from, generations of gamers. Like me, I've been playing Doom for 15, 20 years now, okay? So Microsoft buys the ZeniMax Studios, and now they haven't announced it, but everybody's kind of waiting for them to say, okay, now we own Fallout, we own Elder Scrolls and Skyrim, and when the new game comes out in whatever 1 to 3 to 5 years, it's not going to be available on PlayStation, right? That is the risk right now that people who are buying PlayStations are running into, is like, and it's not just that one example, right? They're both trying to develop this edge where they have exclusive games on their platform, and that, I think, is going to be the real deciding factor over this console cycle of who wins this race. And so last console cycle, the one that the current gen, PlayStation killed Microsoft. I mean, PlayStation 4 has outsold Microsoft, Sony. PlayStation 4 has outsold the Xbox Ones by about 2-1. So that's a huge advantage. So Microsoft sees, okay, we need to make some moves here. We need to make some acquisitions. So the purchase of that development studio that owns all that IP is kind of, to me, like a window into the future of where things are going. And I would also expect to see, PlayStation try to come back with something not necessarily bigger and better, but something that's at least equal to that kind of a thing. So they could say, well, they might have Fallout, but we're going to have this game or whatever it is. And again, this is pure speculation. I mean, Microsoft has not announced that the new Fallout games, the new Elder Scroll games are going to be exclusive, but that's kind of, we haven't made any decisions yet on whether it's exclusive. Wink, wink. Like, that's kind of what Microsoft is doing. So that's in a nutshell what's going on with the console wars.
Okay, great. So let's discuss a little bit these new trends in a little bit more detailed. And you mentioned mobile gaming, you mentioned cloud gaming, and the new subscription model. So Microsoft is investing a lot in the subscription model. I understand they kind of want to become the Netflix of gaming by
Yeah.
providing a library of games. So
Yep.
I was interested in your thoughts. Tell us more about these new trends and the evolving business models for these companies.
Sure. Okay. So mobile gaming, let's start there. So mobile gaming is a huge story. It's the highest growth rate. If you break it into segments, right, you've got your PC segment, which is the hardcore gamers. You've got your console segment, which is your casual gamers. And now you've got your mobile segment, which is like your hyper casual gamers. So the mobile gaming space, first of all, mobile gaming didn't even exist before 2007 with the launch of the iPhone, right? So mobile gaming now has the highest growth rate and the largest revenue dollars compared to PC and console. So it's already the biggest, even though it's only been around for 13 years. And mobile gaming over the next 5 to 10 years is going to continue to mature and grow as the mobile technology continues to spread around the world and as mobile technology continues to get better and faster and better. So mobile is a huge emerging market story too. So there's such a low cost of entry for somebody who wants to play a mobile game. So if you think about, I want to buy an Xbox, that's $300. If I want a mobile phone, I've got one, right? And in the emerging markets, it's even more. The mobile phones are even cheaper in the emerging markets, right? So it's a lower cost of entry. Internet connections around the world are getting faster and faster. More and more people around the world, especially in the emerging markets countries where the majority of the population of the entire world exists, has access to mobile technology, and they're playing mobile games with their mobile phones. Okay. So what that means in, the growth rates and, the opportunity, it's like a modern day gold rush. So right now there's tons of competition. There's new entrants into the mobile gaming space. There's a lot of M&A activity as top publishers. They're buying up these mobile developers to boost their mobile offerings. So when you think about mobile, just think about biggest segment of the gaming space, fastest growing segment of the gaming space. And in a lot of ways, it has the most legs to run because the consumer who is such a low cost of entry and there's such a huge emerging markets presence in the mobile space that there's a long way to run in the mobile story. Cloud gaming, which we talked about a little bit, it's not there yet, to put it simply. So there are a number of different cloud gaming offerings. And first of all, what is cloud gaming? Cloud gaming is where you don't need to buy the Xbox. You don't need to buy the PC. All you need is an internet connection, a browser, and a controller. And then you have a subscription service, and you open your browser, your Google Chrome or whatever it is, and you're off and running. Because all of the computing is, instead of being done in the PC or the console in your house, it's being done in the cloud, whether that's Google, Amazon, Microsoft, whatever. Okay, so as over the next 10 years, I believe we're going to continue to move towards mass adoption of cloud gaming as a viable option for gamers. So as I mentioned, there are some cloud offerings out there, right? Like the Google Stadia came out and is widely considered to be a flop. Amazon just announced a cloud gaming platform called Luna in the last couple of months, or it's beta testing, I think, right now. So if you have the Microsoft Xbox Game Pass Ultimate, you have access to a limited library of cloud games. So if you have access to Game Pass, you can theoretically take a controller with you and go wherever you want in the world and have access to the games that are on the Microsoft Cloud Gaming Library. So I think right now the limitations to cloud gaming go back to what I was talking about earlier with what's on the platform, what's available, right? So not all the games are on the cloud gaming platform. I think that the internet connection speeds, especially in the United States, are not necessarily up to the standards that they're going to need to be to create a seamless gaming experience. 5G, whatever the 5G rollout that's been going on for the last 5 years, as it continues to roll out and as more and more people kind of join the 5G network and the speeds go up, I think that's going to make it easier for the cloud gaming story to happen. And then I think really what needs to happen is those libraries need to become more robust, right? Like if you're going to have a cloud gaming service, whether you're Microsoft, Sony, Google, PlayStation, whatever, you're going to need to have a reason for people to buy your service, maybe in lieu of buying an Xbox or a PlayStation. And I think that's the key here, is because if I'm a casual gamer, which I am, so if I'm a casual gamer, and I'm not going to buy the new Xbox this time, right? I'm not buying it in the next couple months or maybe even the next year. Let's say they roll out a cloud gaming service that works and all the games that I want to play are on it. Why would I spend $350, $500 on the Xbox? I have no incentive to spend that money on that Xbox when I could just log on and play. Okay, so you're going to see the people who are the console gaming crowd like me maybe say, well, now I have a choice between buying an Xbox for $500 plus paying the monthly subscription, or just going just with the monthly subscription, no initial outlay required. So that's kind of the big cloud gaming story for me. We're on the cusp of it. In the next 5 to 10 years, I think that you're going to see, when I talk about PC, mobile, console, cloud gaming is going to become a bigger piece of that pie and become a bigger part of the overall gaming ecosystem. So, and what's next too, I think one more thing too, just very briefly, I mentioned the subscription model of the Game Pass games. The subscription model is also being used to generate revenues within actual games. So the old model for video games is game as a product. You drive down to Toys R Us, you buy Mario Kart, boom, $50 one-time purchase. Game as a service, which is the new model, means there's no initial outlay, there's no initial cost necessarily. It's a free game, and then once you start playing the game, there are incentives to buy in-game items. So Fortnite is a great example of this. Fortnite is a free game. Fortnite made $2.4 billion in 2018 by selling items in the game, like skins, costumes. Let's say you want your character to look like Spider-Man or Stormtrooper or whatever. You spend $5 to $10, and then you're playing the game as Stormtrooper. So there's ways to kind of personalize your game experience. And it's really flipped the video gaming industry on its head, because it's extending the life cycle of individual games. It's increasing the maximum amount of money that a company can make off a single consumer. And in some cases, it's even kind of lowering the operating cost or raising the operating margin for these companies, because it's cheaper to kind of drip content out than it is to, develop a whole new game from scratch. So that's another very exciting. The game as a service model thing is a very exciting business development in the ecosystem.
Definitely very exciting trends. And as you mentioned, 5G could be a game changer for cloud gaming as well as mobile gaming. Now let's talk about your ETF, ESPO. Tell us how constituents are selected and weighted in the index, and how ESPO tries to capture the entire ecosystem of gaming.
Sure. Okay. So the ETF, VanEck Vectors Videogame and eSports ETF, tickers ESPO. It is a passive ETF, meaning that it's tracking an index. So the index is the NBIS Global Video Gaming and Esports Index. So there are rules that the index uses to create its allocations. So the key feature to the rules are the pure play rule. So to be initially eligible for inclusion, a company must make over 50% of its revenues from video gaming or esports. So right off the bat, you're excluding Microsoft, Sony, Amazon, Google, and on and on and on. All these tech conglomerates that are making a ton of money from video gaming, but they're not really video game companies as a percentage of their business. So right there, we're taking only the companies that are pure play, we call them. And from there, we're weighting according to the available free float market cap with an 8% cap on individual positions. And then we're targeting the top 90% of the pure play universe according to the free float market cap. So the resulting portfolio is targeted just to the specific industry because of the pure play rule, and it really tilts towards large cap names, but it does provide mid and small cap exposure in some of the smaller weightings. I want to say the smallest companies in there is just under $2 billion, between $1.5 and $2 billion. So it's technically a small cap, but that is the smallest position. So yeah, that's the in a nutshell the driving features of the index which the ETF tracks.
Right. So I'm looking at the top holdings. Tencent, which is a Chinese gaming giant listed in Hong Kong. That is the top holding currently. NVIDIA, the chip maker, and
Yep.
then C Limited, which is
Yep.
a Singapore-based
Yep.
company, I think, and then Nintendo, AMD. These are the top holdings in this ETF. And I also see companies like Activision, Zynga, those game makers. Talk to us about some of the top holdings, what they do, and the ones that you like a lot.
Yeah, I mean, I like all the companies in the index, but so
Sure.
the top name, NVIDIA. I mean, that's that. So one of their core businesses is creating the GPUs for high-end gaming PCs, and GPUs is the graphics processing unit. Basically, it's defining the experience for the consumer. So if you are a person in the hardcore gaming category and you want your PC to, you want your gameplay to look so real, you can feel it and see it, and it's amazing. NVIDIA and AMD too, they're the companies that create these chips that kind of define that experiences. So right now, gaming demand is through the roof. And so if you look at NVIDIA's website or you read their reports, you can see that demand right now is outpacing supply. People want these chips. They want to be playing video games on the fastest machines possible. And anecdotally, this is really cool. So, I'm very dialed into the Reddit sphere and the Twitter sphere. So I'm very engaged with what's going on, boots on the ground kind of stuff from consumers. And it's a great way to see what's going on and check the pulse of the industry. And anecdotally, the new chips from NVIDIA and AMD, they'll release a batch of new chips and you cannot get your hands on it. It's just like like you were talking about with people, they want to buy a new Xbox, but they can't because the demand there's no supply, right? So we're seeing the same thing from NVIDIA and AMD too, that if you go to the Reddit message board or on Twitter, people are going nuts because they can't get these chips, and the ones that they can get are priced double than what they should be, right? So the demand for the gaming chips and the semiconductors that are defining experience is through the roof right now. And NVIDIA is also diversifying away from gaming. I want to say their gaming is either right at or just under 50% of their overall revenues, and they're diversifying into AI, they're diversifying into data centers, they're diversifying into autonomous vehicles. And you saw that with the ARM acquisition that was just announced over the last couple of months, where ARM has an AI computing platform. It's not a video game stuff. So we see NVIDIA diversifying their business line because they're doing such a good job in the gaming space, gives them maybe a little bit of freedom and flexibility to move into some of these other high growth, forward-looking, innovative sectors. And we can talk about Tencent too. I mean, Tencent, it's a name that's bandied about, in the gaming community and the investment community. The way I think about Tencent is it's the king of gaming. It's the king of gaming for China, for Asia. It is the world leader in private investment in gaming companies. Tencent owns Riot Games, which is the publisher of League of Legends, the number one eSports game in the world. And it has also made a ton of key investments into other gaming leaders like C Limited. Tencent also made an investment into Activision. Tencent is a minority stakeholder, but not a small minority. Like I want to say they own 40% of Epic Games at one time, which makes the Fortnite game, which is very popular. So again, Tencent is another example of a company that's done so well in gaming, and it's grown so much that they have the flexibility to diversify away from gaming into news, music, chat, and even finance. So Tencent's a great company, and that's one of those. I mean, they're the 500-pound gorilla in the room, in my opinion. And I guess the last one we can talk about briefly is C Limited. Some people know about C Limited, but I think the majority of people don't know C Limited. So C Limited, like you mentioned, based in Singapore, but they're focused specifically and exclusively on emerging markets, mobile consumers for gaming. Okay, so they have this game called Garena Free Fire, and it is a hugely popular mobile game. And I think the most recent update is they said 100 million people a day are playing Garena Free Fire. So their primary revenue base is Malaysia, Thailand, Philippines, and on, Southeast Asia. Okay, so they don't even care about the United States. They're just focused on their own company or on the surrounding countries. Brazil is an interesting case too, because Brazil is an EM country, and they have a very, very robust and growing mobile gaming and esports presence. And so C is also doing very well in Brazil. And again, it's like a theme here is that C is doing so well in the gaming space that they're diversifying into digital payments and e-commerce. So they're taking their cash cow of gaming and they're saying, well, let's invest in other innovative, forward-looking growth segments, digital payments and e-commerce. So there's kind of a theme here is that these companies do very, 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 very well in gaming, and then they say, well, how can we leverage our gaming expertise and our gaming network and grow into new areas and new markets? So that's what we're really seeing from the top companies, and I just love talking about C because it's just an exciting company. I mean, they're up 360% year to date, and they were up 175% for 2019. It's one of those. It's one of the top holdings for hedge funds. So it's just a really exciting company, and it's just really cool. So
those are very interesting, very innovative companies, and they have done very well this year. As you mentioned, C is up more than 350%, and NVIDIA, Tencent, they have also done very well, and that explains the performance of your ETF too. So congratulations on the excellent performance this year. It has attracted a lot of assets this year as a result of excellent performance. And thanks so much for joining us today.
Hey, thanks a lot for having me on, Nina. I really appreciate talking to you. Have a great day.
So that was JP Lee, product manager at VanEck. There are 4 ETFs in the video gaming space. The one by VanEck is the largest, ESPO. It has more than 640 million in assets. And then there is one by GlobalX Video Games and eSports ETF, ticker symbol HERO. There's one by ETF MG. The ticker symbol is Gamer, GAMR. Then there is one by Roundhill, that is the newest entrant in this space. Roundhill Bitcraft Esports and Digital Entertainment ETF. The ticker symbol is NERD, NERD. The performance is pretty similar. All these are up between 65% to 72% year to date. NERD is the cheapest, 25 basis points in expense ratio. And in fact, we had Will Hershey, who manages NERD, on the podcast in March. So you can listen to that episode if you want to learn more about NERD. And thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. And also make sure to subscribe so that you do not miss any episode. If you have any comments or questions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.